Congratulations! You found the Pirls Stock Market Commentary for June 21st, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio rose from 0.77 to 0.93, advancing but still within bearish territory. The total count of securities in bullish or bearish patterns rose 2% to 3,168. The count of bearish stocks decreased 7%, while the count of stocks in bullish patterns increased 13%. The Pirls P&F Market Breadth Summary Chart shows us a market now 4 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Register. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 23 points for the 10th rise in 20 weeks. At a negative 11.61 points, it continues below all 9 tops above plus 100 and above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode. In the last 2 weeks, the Nasdaq had 3 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode. Since early June, the gyrations in the CCI 20 weekly have become more extreme, but there have not been 6 or more days below zero to cause a change in Woody's trend. Monday, 6/15, the CCI 20 daily continued its decline to below minus 100, but Tuesday through Thursday it rose above plus 100 and ended the week at plus 152.84, outside the range for a zero-line reject long entry. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 48 weeks ago, while the daily CCI 20 began a Woody's uptrend 9 weeks ago. The CCI 20 weekly continues in a Woody's uptrend and at plus 109 remains outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, networkers, and S&P retail continue in the top 5. REITs and semis have left the bottom 5 and entered the top 5. Gold and silver continues in the bottom 5. Oil services has left the top 5. Bearish, brokers, and KBW Bank have left the top 5. Computer hardware and brokers have entered the bottom 5. Focus this week from www.theeconomiccollapseblog.com. Signs of Financial Turmoil in Europe, China, and the United States by Michael Snyder. Some of the key points in the article are as follows. As we move toward the second half of 2015, signs of financial turmoil are appearing all over the globe. In Greece, a full-blown bank run is happening right now. Meanwhile, Chinese stocks are absolutely crashing. The Shanghai Composite Index was down more than 13% this week alone. That was the largest one-week decline since the collapse of Lehman Brothers. In the U.S., stocks aren't crashing yet, but we have just witnessed one of the largest week outflows of capital from the bond markets that we have ever witnessed. Slowly but surely, we are starting to see the smart money head for the exits. All over social media, people are sharing photos of long lines at Greek ATMs as ordinary citizens rush to get their cash out of the troubled banks. And if there is no debt deal by the end of this month, the Greek debt crisis is going to totally spin out of control, and financial chaos will begin to erupt all over Europe. But instead of trying to be reasonable, EU President Donald Tusk has delivered an ultimatum to Greece, and it almost appears as if EU officials are more concerned about winning a power struggle than they are about averting financial catastrophe. USA Today is reporting that the median stock over in China is trading at 95 times earnings. So these numbers that are coming out of China are beyond crazy, and what this means is that Chinese stocks have much, much farther to fall before they get back to any semblance of reality. Meanwhile, in the US, money is flowing out of bonds at a staggering pace. In Dr. Ron Paul's eyes, quote, the fallacy of economic planning, end quote, has created such a, quote, horrendous bubble, end quote, in the bond market that it's only a matter of time before the bottom falls out. And when it does, it will lead to, quote, stock market chaos, end quote. Yes, this financial bubble has persisted far longer than many believed possible. But all irrational bubbles eventually burst. And you know what they say, the bigger they come, the harder they fall. When this gigantic financial bubble finally implodes, it is going to be absolutely horrifying, and the entire planet is going to be shocked by the carnage. Thank you for tuning in for this week's Sand to Pearls Stock Market Commentary, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you had a delightful Father's Day, that you're looking forward to a great week coming up, and wishing you true success.